Hello. So today I have prepared for you a plan. Now, as a trader, there's one thing you know that a trading plan is not only the most important thing, it is a central thing to you making money in these markets. Without a trading plan, my friend, not only are you dead, but you have already buried you. So a trading plan is central to your profits, and today I decided to make a weekly trading plan to help you in your trading coming this week. Now this is a Word document. I'm going to attach this Word document to in the description. So let me explain what is in the content. Then from there you'll download the Word document. Then you'll use it in your trading. So let us begin. So a trader's journey has three steps. We have the psychology, we have strategy, then we have risk management, then we have a daily plan. So a daily plan is what brings structure to your trading so that you don't enter trades based on emotions. So we are going to begin with part 1 or section 1. Section 1 is the trading philosophy and mindset. So before any strategy or rule can work, the trader must build the right foundation because trading is a performance discipline. It rewards preparation, patience, and process of a prediction. By the way, trading is like golf or playing basketball. Only very few people can become very good basketball players or becoming someone like Ronaldo or Messi. So this is the trade. This is trading now, or becoming a professional poker player. So this is trading. This is the it's a performance game. Okay, so the professional trader mindset. The difference between a consistently profitable trader and a consistently losing one is rarely strategy. It is always psychology. Okay, so how does a professional trader behave? Is this how you behave in the market yourself? So number one, they treat the market with respect, not as an enemy to beat. Okay, so you look at the market as a job place where you are going to present yourself with discipline, and then the market is going to pay you for your discipline. Okay, so a professional trader treats the market with discipline and not as an enemy to beat. Number two, they focus on the process, not on the profits, because so their outcomes will always follow the execution. So before you look at the money you're going to make, you have to look at the process you have followed. Did I check my daily plan? Did I check the high time frame, the low time frame? What was my entry? Who, if I was to be placed in another, if this trade was to come again, would I take this trade? Okay. Number three, they accept that losses are part of business and not personal failures. And this acceptance is not in the conscious mind only, even in the subconscious. You have accepted that losses must occur and they are part of the business. Okay? And you don't attach your losses to your identity. You don't start saying that now I am a loser because I am losing. No, 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 no. Alright? Number four, professional traders make decisions based on evidence, not hope, fear, or ego. Okay, so you don't place a trade hoping that it's going to go your way, or then you're fearing that you're going to miss out, then you take that trade, or you want to show other people you're going to make money, so you trade out of ego. A professional trader makes decisions based on evidence and never confuses activity with productivity. So fewer is equals to better trades to win. So the fewer the trades, the better the trades. So this is the trader's creed I want you to follow from today. That I trade my plan, not my emotions. I protect my capital first and let profits follow. I accept uncertainty as the price of opportunity. I do not need to be right. I need to be disciplined. My edge works over hundreds of trades and not one. So I want you to repeat this every day, morning and evening, morning and evening, morning and evening. In the long run, it is going to stick in your mind and it will never come out. Okay, so the next step 1.2, we are going to cover the emotional emotional mastery in trading. There are 6 emotional traps, and you have to have an understanding of how to escape them. So the first emotional trap is fear of missing out. And this fear of missing out comes when we chase trades after the move has started. So the antidote is, if you have missed the move, it was not your trade. New setups form every day, so write in your journal, I only take planned entries. Number 2, revenge trading. This is forcing trades after a loss to win money back immediately. And this is a problem which affects especially the beginners, the year 1 and year 2 and year 3. Past year 4, if you are still revenge trading, you are a joke. So close your platform after losing trade for at least 30 minutes, or the best usually to accept that loss, review it, and just move on. Just move on. You'll find another one tomorrow. Okay. Number 4, overconfidence. When you have won so many times, we tend to start taking excessive risks. Okay. Now, the remedy to this is to remind yourself that the market does not owe you wins, and a win streak is not a skill certificate. You will not be given a certificate because of being green 10 months in a row. No. The only certificate you get is the amount of money you come out of this game with. Okay? You may have made a lot during your prime, but how much did you retire with? So, overconfidence is not, a winning streak is not a skill certificate. Number 4, analysis paralysis. So overthinking and missing valid setups. So if your checklist says yes, take the trade, because planning replaces in the moment decisions. Okay. Then number 5, loss aversion. Moving stop losses further away to avoid accepting a loss. So you have to understand that the antidote to this, your stop loss is sacred. It was placed by your rational pre-trade itself. So when you are doing your analysis in the morning, that is pre-market analysis, you have to place your stop loss, and then you have to tell yourself that this stop loss I'm going to place on this trade is sacred, and because you have placed it when you are logical, that is, and never move it. Okay. Now, how to build a performance mindset. Number 1, which I would recommend, by the way, is to meditate at least 5 minutes every day. If you cannot meditate, do five deep breaths before you start trading. And deep breaths means that you breathe in to your stomach. Okay. So number 4 is exercise regularly, because physical fitness directly improves cognitive discipline. Sleep well for 9 hours. Keep a trading journal. This is the most valuable analytic. There's nothing as important as this. And each day before the session begins, you have to rate your emotional state. Okay? If you score below 6, don't trade. Then review your week on Sundays, and do not judge yourself, but learn systematically. Okay. So what is the psychology week checklist? So this is what you should be writing down. This is what you should be following. This is what you'll be looking at every week. Did I follow my trading plan without deviation this week? Were there any emotional driven trades? What triggered them? Did I revenge trade, overtrade, or size up impulsively? What am I grateful for in my trading this week? What is one psychological habit I am improving? Okay. Now we come to section 2. We were in psychology. Now we are in the trading on the trading strategy. So a strategy is a repeatable, rule-based approach to entering and exiting trades. It must be specific enough to execute mechanically and tested well enough to trust during drawdowns. So you must have tested this strategy in at least 5 years of data, so that you can see that this strategy actually works. Because if you don't know that your strategy actually works, you'll be doing guesswork. You'll be moving from the high time frame, lower time frame, 5 minute time frame. Okay. So a trading strategy contains something called the market structure and bias. So before any trade is considered, the trader must determine the prevailing market structure on the higher time frames. All trades must align with the dominant trade. Let me repeat this. Before any trade is considered, the trader must determine the prevailing market structure on the higher time frame, because all trades must align with the dominant trend. So don't fight the trend unless you are what? You trade reversals, but I will not want you to trade reversals. Just trade the trend. It is easier and you'll sleep well at night. Okay. So how to analyze? We check the monthly and the weekly time frame first. So we are going to do this practically now. Let me connect. So we ask ourselves, what is the current trend on the monthly and the weekly time frame? Is it a macro trend direction? What is the macro trend direction? Are we in a long-term bull or bear structure? Or are we in consolidation? I think should have added also this one. So when we check our chart for Euro, for GBP USD, the dominant trend for the past how many months? These are almost 1 year. For the past 1 year, from May 1 to 2025 up to now, when we are entering we're entering May in 11 days, this trend has been consolidation. 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 So if you have been trading GBP USD and you have never backtested your system during consolidating years, then you must be losing very much, because maybe your strategy only works during a trending market. Okay, so we are in a consolidation market right now on GBP USD, and if you as a trader have not understood your strategy, where it performs well, whether in the bull market, bear market, or a consolidating market, then you are going to face a lot of problems. Okay, so number 2, so if we find that the monthly and the weekly time frame are trending on a consolidation cycle, what we do is we either stop trading until one of the sides is broken completely, or we reduce our risk for the trades we are going to be taking henceforth. We reduce our risk for the trades we are going to be taking henceforth. So if you are trading GBP USD, your risk should be low until you break this level. There is no jokes in this game, by the way. You break, because this trend here is not the same as this trend, which was very bullish. This one is very bullish, very bullish. So right now we are, for the past how many 2 years, this is when we are having a consolidating market. So your risk first of all should be very low. That is the take. That is the take you get from analyzing the monthly time frame and the weekly time frame. Okay. Then we check the daily time frame. The daily time frame will give us a primary trend. So this is the most important time frame. So you have to define your directional bias here. Okay, so when we check our D1 right now, even our D1, okay, this is our when we check our D1 right now, we can see that from the month of April 1st up to April 19th, the market has been on a bullish trend. Okay, right now it has gotten to a level of a very clean support, and I'm expecting or I'm anticipating that this is going to be our high of this month. That is my anticipation for this week. So we are going to have this is going to be our high of the month. If not this, maybe it should come to this level here. But the overall trend I'm looking for is price creating a high of the month. Then after it creates the high of the month, we are going to see sales from that point. So the daily time frame is what gives me the bias, which I'm expecting for the week. Okay, for example, this week I'm expecting sales. Then we check the 4 hour. In the 4 hour, we check the structure within the daily trend. We find key supply zones and key demand zones and swing points. So let us go and check the key demand zones. So we have said our first key demand zone is here. I can also stretch my fib. I can stretch my fib like that. When I stretch my fib, this is the sweet spot level. That is why I'm saying price may decide to come to that level. That is 36,500, which is an institutional price level, to react there. So that is about 50 pips. So that is about 50 or so pips. No. Sorry. About 135 pips. Okay? So price may decide to go up to that level to get the high of the week and simultaneously the high of the month, so that we can sell. Okay, so that is a 4-hour time frame. My friend, if you want this money, you have to be very systematic. Then in the 1-hour time frame, we refine our entry, look for confirmation patterns within the 4-hour structure, and then in the 15 minutes time frame, we do what is called a precision entry timing only, and we don't use the 15 minutes time frame for buyers. So market structure rules. Higher highs plus higher lows on the D1 equals to bullish buyers. So only take long setups. So higher highs. Okay? So this is what it will be looking like. So for price to create another higher low, then another higher high, so this will be our point of entry up to this level here. Okay, lower highs plus lower lows on D1 equals to bearish buyers. Only take short setups. And in a consolidating or choppy market, reduce size by 50% or stand aside entirely. What I said to you, what I told you. Now, never ever trade against D1 trend on a lower time frame setup alone. So the core entry strategy, confluence based setups, only take trades where a minimum of 3 confluences align. The more confluences, the higher the conviction and the larger the allowable position size. So confluence checklist, and this must be completed before every trade. Trend alignment, is the trade in the direction of the D1? Is price at or near a significant supply or demand zone or a significant order block? What is a confirmation candle? A valid trigger candle. Is there a engulfing candle, a pin bar, an inside bar? Okay, and I'm going to prepare another lecture to teach you about candles, candlestick language. Another confirmation, the fib level, the session open confluence. Are you trading during the London session or during the New York session? Is it during the kill zone hours? So I don't, if you use moving average, are you checking for the 20 EMA or 50 EMA or 200 EMA? Now, if any of these apply, do not trade. There's high impact news within 30 minutes, or if you trade news, this is okay. Or price is in mid-range with no clear structure, or price spread is more than 3 times normal. By the way, this is usually a very big problem. And if you are in an emotional state, anger, fatigue, or greed, don't trade. Now we go to chapter 2, entry, stop loss, and take profit rules. We start with entry. We enter on close of confirmation candle or on a retest of the break level. Never chase. So, for example, if price decided to come to this level, this is what we call a mitigation block. This is a mitigation block because price mitigated this level, then it broke away. So when price comes here to mitigate this level, this becomes a mitigation block. So when price comes here, our entry will be an engulfing candle. We are going to be looking for an engulfing candle so that we can go up. If there's no engulfing candle, or if price crosses below this level with a very strong energetic candle, we don't get in. Stop loss. We place our stop loss beyond the nearest structure. So if our trade is going to form a very good bullish engulfing candle, our stop loss will be below that bullish engulfing candle because this would have formed a new structure. So below the engulfing candle. And then you have to have at least 2 positions. This is a very good strategy, by the way, of risk management. 2 positions. So one position you take at least 1:1, then the other one you aim 2:1. Okay. Then there must always be a break-even rule. So always move stop to break even once price reaches 1 hour profit. Do not hold trades over high impact news unless in full profit with stop loss at break even. Why do I say this? Because sometimes, especially during this market for 2026, you might find that price is going to go below your stop loss during high impact news. So it is always good to wait for the high impact news, but if your profits are intact, then there's no need to hold. Now, you also have trading sessions and the best hours. So this market is at 24 hours. So the best time to trade London session is between 8 to 11. because this is a time when we have the best liquidity, and the trend is there is a trend continuation or breakout from the Asian range. But in the New York session is when we have high volatility because it coincides with US data releases and it is strong for directional moves. Section 3, which is one of the most important section, risk management. So risk management is the single most important determinant of long-term survival and profitability. A trader with a 40% win rate and a 1:3 RR will outperform one with a 70% win rate and 1:1 RR over time. So gentlemen, ladies, protect your capital at all time and never go against protecting your capital. There are 5 iron rules of risk. Number 1, risk no more than 1 to 2% of accounts. So for new strategies, don't even trade with your real money. First, wait for that strategy to mature by trading it on a demo. So I have written for you a very good risk management plan here. I know you're going to go over it. Now, once your trade management rules are hit, for example, once TP1 is hit, move stop to break even for this trade. Now, this is the most important section. That is the continuous improvement of your system. Allied traders improve because they track everything. They review ruthlessly and adapt intelligently. So they set up these systems and commit to them weekly. So the trading journal is the most important and valuable tool. So this is what you have to journal: date and time. So you have to write your exact entry time, exit time, and duration of trade. Then you have to also check pair and direction. I've shown you how to do that. Then you have to set up what is a setup type. Okay, entry, lot size, result, emotional state. Rate yourself 1 to 10 at the time of entry and note the feelings. Execution quality. Did you follow the plan? Yes, partially, or no? And at the end of each week, run these general statistics: your win rate, average RR, best and worst performing pairs and sessions, correlation between emotional state score and trade outcome, percentage of trades that fully followed the plan. You must also have a monthly performance review. Compare your monthly results against your baseline expectations. Identify the top 3 mistakes made and write a specific correction for each. Review your best 3 trades. What made them work? Replicate these conditions. Evaluate whether your strategy edge has held up. Check win rate and average RR. Set one specific goal for psychological improvement next month. Decide whether to increase position size based on a 3-month profitable track record only. So you must increase your position size only with a 3-month profitable track record. Still on the strategy improvement protocol, don't change your strategy if you don't have a minimum of 50 trade samples showing a decline in edge. So never change a strategy after 3 to 5 losing trades, because that is noise. Okay? So we come to our weekly trading framework. On Sunday, we have to prepare for 1 to 2 hours. Number 1, you have to check the economic calendar. So go to your Forex Factory or investing.com and mark all high impact news. Number 2, do a top-down market analysis. Review the weekly chart. What's the dominant trend? What's the major support and demand? Review your daily chart identify the 3 to 4 pairs showing the clearest setups, then mark key levels on charts, write your weekly buyers, then write your previous week review, then your daily trading framework. This is a framework which is done 45 minutes before trading. Okay, so in the morning you have to do something physical, exercise, stretch or walk to get your blood flowing. This is non-negotiable for peak mental performance. Number 2, rate your emotional state 1 to 10. Number 3, check economic calendar, any high impact events today. Number 4, open D1 and H4. Number 5, review your 3 to 4 watch list pairs from Sunday. And then number 5, set alerts on zones which you would want to see price change. This will prevent screen staring and impulse entries. And then number 4, wait for the session to open. During the live session, in fact, what I would advise you, observe, wait until 1 hour, 1 hour into the market. Why? Because the kill zone begins immediately 1 hour after the market opens. Okay, so don't trade the market open, trade the kill zone open, kill zone hours. So the kill zone hours occur 1 hour after the market open. So for example, London session opens at 9 a.m. Kenyan time. So the kill zone begins at 10 a.m. Okay, then you evaluate, is price approaching one of our marked levels? Does it match the Sunday watch list? If 3 plus confluences are met and no blockers exist, place the trade with the pre-planned entry. And then after that, managing the trade is checking the TP1 level and then moving the BE. Do not micromanage your trade. Do not micromanage your trade. Once per hour, are open trades still valid? You have to ask yourself during the trading session. Any events approaching? If fundamental picture changed, reevaluate. Okay. So this is a daily trade filter which you should ask yourself in the 5 before you take any trade. Is this trade in the direction of the D1? If no, stop. Is price at a clearly defined pre-marked key level? If no, stop. Do I have a valid confirmation candle? If no, wait. Is my RR at least 1.2? If no, stop. Am I in an emotional state right now? If yes, wait. You can see these are very strict rules. So at the end of the day, you have to also perform some other rituals. That is journaling for 15 to 20 minutes. It's called, what do you call it? Checking your performance. So you close all your intraday trades, then you journal every day, every trade, you screenshot every trade, you calculate daily P&L, then you prepare, then you mentally debrief yourself. Today I did this, then tomorrow this is what I'm going to do. Then you disconnect. So I have prepared a structure for you. So this structure is what you'll use for your daily trading and weekly preparation trading. Okay? And if you're listening to me for that long, if you want a mentorship, I have attached my WhatsApp number on the description. If you want a mentorship, talk to me. So this is the end of this presentation. Everything else is now upon you to take it to yourself to make sure that you are profitable this week, at least following this system. So thank you for your time. Let's meet in the live sessions.